Excellent. Let's go ahead and jump into it. So thanks again, everybody, for joining. This is a fun presentation that we're going to do today about building your team. Probably, as a remote investor, one of the most important things that you can do. All right, perfect. So, but before we get going into this presentation, we're going to talk very quickly, a little introduction. My name is Tom Schneider. I'm the Director of Investor Education here at Roofstock. I previously led the operations team here at Roofstock, where I was overseeing the team that was getting listings up, closing transactions, doing appraisals, all of that good stuff. Before that, I was leading product at one of the very first single-family publicly traded REITs, so helping build out the technology to manage acquisitions, property management, leasings, dispositions, repairs and maintenance, all of that fun stuff. I am an active real estate investor throughout the Southeast and the Midwest with a buy and hold strategy, and I am also a California broker.
Awesome. So my name is Michael Albom. I am the head coach with the Roofstock Academy, which we'll be talking about in just a minute. We got 10 plus years as an active real estate investor. I used to work as a professional fire protection engineer for nearly a decade in the commercial property insurance industry. And I have experience purchasing single family homes, condos, multifamily value add, commercial double net and triple net properties throughout the country as well.
Excellent. And the agenda for today, so we're going to talk briefly about Roofstock as well as Roofstock Academy, going into identifying the different team members as well as some commentary on sourcing them, when to add them in the process, and some kind of general thoughts. And then we're going to look into a specific interview guide as a framework to think about when you're adding these important partners, important checkboxes to hit to make sure that you're talking to. And within those guides, we're going to hit on specifically lenders and property managers, and then take a look at this comparison tool once you've gathered your list of vendors. But on to it, about Roofstock. So Roofstock is the leading marketplace for investing in single family homes. We use technology to transform the way real estate is bought and sold. A way I like to paraphrase our goal in making real estate stock market simple, I guess isn't really paraphrasing, but just it's adding liquidity, making it easy to get in and out. And that is ultimately Roofstock's goal, to bring some of the same tools for acquisition and analysts that is available on Wall Street, bring it down to Main Street.
So in talking about the Roofstock Academy specifically, it's comprised of a couple different pieces. One is on-demand lectures, the second piece is coaching, and then some proven tools. And so what the Academy comes with is over 50 hours of on-demand lectures that are available on mobile platforms as well. It comes with 5 hours of one-on-one coaching, and that's good for 1 year. And then full access to our single family playbook, which is a suite of tools we've developed specifically for the Academy. And we'll be talking about a couple of those tonight. Just some quick stats. We have over 335 members. Our members have purchased over 15 million in real estate, and we have a program satisfaction score of 4.94 out of 5. So we're constantly taking the temperature and a pulse of the members and the Academy, and things, looking for ways to improve it and things we can do better. So the on-demand lectures, this is a snapshot of what the program actually looks like from a platform perspective. We have different chapters with different segments, kind of bite-sized segments inside each chapter. And it's designed to really be an a la carte style academy. So if you've got some experience in real estate investing, and so you maybe don't need some of the basics, but you're interested in dispositions or selling or scaling, you can just go specifically to those sections and learn about those. And then next we have the coaching aspect, which is we do one-on-one coaching with either myself as the head coach or Tom or Emil or one of the other various coaches we have in the Academy. We do a monthly group coaching call where we talk about a hot topic that's come up regularly in a lot of the one-on-one coaching sessions, and do a deep dive with small groups into that topic. We also do a monthly book club. Some of you might be familiar with the forum and website Bigger Pockets. This month we're reading one of the Bigger Pockets book from Chad Carson is the author, and he's actually going to be joining us for the book club, and that'll be next week. We've got a few other authors who are going to be joining us as well in subsequent future clubs, which we're really excited about. And then once we get through this post-COVID era, we're hoping to do a lot more local meetups, both locally in California as well as throughout the country. So coaching surveys, we have an average score of a 4.92 out of 5. Again, constantly taking the pulse of how those are going. And then some other benefits that you get for being an Academy member, we have a Roofstock marketplace export to Excel. So you can basically export all of the active listings on Roofstock into an Excel sheet and sort and filter those a little bit more by criteria. And then we have monthly John Burns market data. John Burns is recognized as one of the chief economists in the single family space. And so his company publishes paid data that we buy and then provide for the Academy members, as well as celebration gear for closing transactions. We like to celebrate everybody's wins.
A couple of things that I like particularly in this slide is the export to Excel, all the listings. For me, I love to look at stuff in Excel. You know, the pictures are all great, but as a first kind of line of defense or offense, I guess it would be, is bringing it to Excel is really helpful in evaluating a lot of properties at one time. And the other piece that I think is worth noting is, you know, while we just have a year of the one-on-one coaching, just because of like it's pretty high overhead, you get a lifetime for the group coaching. So as we have, you know, experts like Chad Carson come in and other thought leaders in the space, you get a lifetime access to that, and versus the 1 year of one-on-one coaching. Other aspects include the SFR playbook. So we're actually going to open up one of the parts of the SFR playbooks, a couple of our interview guides that are specific to vendors, property manager, as well as lender today. And I mean, the real value to this is just taking advantage of mistakes that we may have made in the past and other professionals where, oh man, I wish I had asked them this, you know, and I could have avoided why. So that's just some tools we have. We also have some really cool models down to building a portfolio, working backwards from $100,000 of passive income. What does that look on a year-by-year strategy basis, down to individual property analysis tools that we use. And this is all the kind of stuff that the way that bigger institutions and REITs and funds are thinking about it bringing those institutional level tools within these playbooks in the SFR playbook.
And just lastly, a quick question popped up, Tom,
yep.
not to interrupt, but someone asked, what is SFR? And so SFR is just an acronym for single family rental, otherwise known as a house or single family home.
Yeah. Note that while, you know, the Roofstock Academy, it has Roofstock in the name in it, but it's not specific to Roofstock. We have a lot of members who buy off of Roofstock, who buy multifamily, who buy single family, who do all kinds of stuff. So it's while we love the marketplace, it's the content that we have is not specific to that. This is as we're making great investors in all platforms. So the fourth pillar of this is the private forum. So this is arguably one of, like, I think the highest value adds in that you're getting pretty much real-time feedback on questions using this private Slack forum where we have all the different coaches we have, and they can ask questions and get pretty much real-time from all the different coaches instead of just a one-on-one coach. And you have lifetime access into the Slack forum as well. So talking about specific markets, looking for property managers in areas, looking for, you know, all of those type of questions. This is a really awesome private forum to have that.
So there was a couple of questions I saw pop up in the question section about the cost of the program. So normally it's $12.50. That's a one-time payment. There's no upsells. There's no additional charges. It's a one-time lifetime access entry fee, $12.50. And using the coupon code Thanksgiving 2020, we'll actually discount that to $10.98. So that's whatever, $152 off. And that coupon code expires Sunday, end of day. So some financial benefits that we're actually able to offer with the program, which is super exciting, is $2,500 back in basically cash back across 5 different transactions. So every property you close on Roofstock up to 5, you'll actually get $500 cash back for closing on that property. We also offer a lifetime full refund satisfaction guarantee, no questions asked. So if you get into the program and turns out it's not at all what you thought it was, or you can't stand the sound of my voice, your coach's voice, you can get a full refund, no questions asked, as long as you haven't used any of those cashback incentives, and we can get you a full refund. And for those of you just joining us, this session will be recorded, so we'll send everybody out a link to the webinar as well, so you can take a look at that coupon code. One other thing I wanted to mention is, like Tom was talking about at the beginning of the call, the Remote Real Estate Investor is Roofstock's podcast. So that's available anywhere you listen to podcasts, so Apple, Google, Spotify. We have a lot of fun, talk about a lot of great stuff, a little bit biased, I'll admit, and then we try to have experts and guests, like Tom mentioned, thought leaders in the space on every week, so we can pick their brains and grill them about things that are going on in different aspects of real estate investing as a whole.
Yeah, a lot of great podcasts out there where we kind of have our niches is specific to being a remote investor. Excellent. So let's go ahead and jump into the content, starting with identifying these different team members, as well as some key aspects with sourcing and that process. So, Michael, why don't you go ahead and lead us off?
Yeah, so one of your key team members is definitely going to be a lender. And so we kind of broke things down into different categories, talking about timing, sourcing, and then some pro tips for each of the members that I would want to put on my team. And Tom, I know that you've looked to put on your team. So ideally, the lender, and again, this is all kind of an ideal scenario, should be acquired before the offer is submitted. And so you can talk to different lenders, and I would say start with whoever you do your banking with. If you have a checking account at Wells Fargo, ask Wells Fargo if they lend on investment properties out of state from wherever you live. They might not. And so at least you can just start the process. But I would start that process before you make an offer. And sourcing for these, where to go find these folks, again, just can be personal references, professional references, could be coming from an agent. They could come from a forum, whether that's Bigger Pockets or the Roofstock Academy. And then lastly, online research. So just doing a Google search for lenders in out of state or lenders in whatever market you're interested in purchasing in. And some pro tips surrounding lenders is I think it's really great to pre-qualify early to know what your purchasing power looks like, and it really strengthens your offer because you can submit that you can submit that letter with your offer to show any seller that you're a potential serious buyer. And I would absolutely interview 2 to 3 lenders on the front end. And we have, pre-qualify here. I just want to highlight that that's different than pre-approval. Pre-qualification is usually a much simpler, a much easier process, as opposed to the pre-approval is a pre-qualification is basically a lender saying, yeah, we're interested in lending to you based on the information you've given us. A pre-approval is a commitment to lend. Pre-approval is going to require them doing a background check, or excuse me, a credit check, looking through all your financial records, tax returns, W-2s, a very full in-depth financial review of you as a borrower. Versus a pre-qualification, you'll typically get them statements of your income, your expenses, what your credit score is, just in number form. And oftentimes lenders can give you a pre-qualification letter. That's really what you're after, is that simple letter, not necessarily the full-fledged pre-approval.
A few other points of color that I'm going to make on the lender is another pro tip is within these partners, even on the sourcing, I like to overshare. And what I mean by that is if my strategy is I want to buy 2 properties, at a lower value, or I want to buy 1 property at a higher value, in talking to your lender about that, they're going to have a much better idea if they're a good fit for you. So, is your approval, is there approval in getting multiple properties, or is it up to a certain level amount? So again, the kind of general theme of that tip is I would overshare with what you're trying to do with them, and it's going to give them put them in a better position for them to know if they're going to be helpful to you or not in going through the process. The other, go ahead.
I was going to say too, Tom,
Yeah.
it's important, I think, to overshare in your long-term goals and long-term vision, because you're going to want to look to grow with these folks. Going to get a new lender for every single deal you do is not ideal. Some of us have to do that, but finding someone who you could grow with from the start, I think is going to be really beneficial and really advantageous, both from a time savings perspective as well as a cost savings perspective.
The second thing that I'll touch on, I think for all of these, and the sourcing, that order is in a very specific order. If I know this is totally corollary, but like Maslow's hierarchy of needs, like the top of the pyramid. Nope, it's not related. But anyways, the top of the pyramid is personal references is really like the first place that I'll start with and put a little more credence, especially with people who've done work with that particular vendor before. After that level, professional references. And I would say there's specific professional references. So if I'm dealing with a lender, I want a professional reference from someone who deals with lenders, like an agent is a good example. Or if I'm dealing with title, they're professional references on related fields is a good way to think about it. So I'm going to move into property managers. So this is someone that I would add very early in the process, and I would move them to the point where you can include them in your acquisition process. Whenever I acquire properties in an area, I don't want to be scrambling at the last minute saying like, oh, I got to find a property manager. I got a property in contract. An ideal way to do it and is to bring them on early, have a couple in the hopper that you're interviewing and make part of the interview process. Hey, I'm looking at buying 123 Main Street. What do you think the market rent is? What do you think of this neighborhood? Have you seen a lot of appreciation? Do you manage a lot of properties in that area? So I would bring the property manager in super early so you're not scrambling at the last minute and make them part of your acquisition team. As far as sourcing, that same sort of hierarchy. So personal references at the top of the hierarchy, professional references. Your agent is going to be a good example. Roofstock has whenever market that Roofstock opens, what they do is they do a evaluation of all the different the property managers in that area, and they'll list up the top ones. I think even if Roofstock or your agent is recommending a property manager, you should still go through this exercise of formally interviewing them and making that a really data-driven decision. Next would be Forum. Bigger Pockets is a great place that has a lot of references in there, as well as Roofstock Accounting, as I'd mentioned. And then lastly would be the old online research, but starting at that top with personal references. Again, pro tips, as I mentioned before, including your PM early in the process. And even though you interview your first one, you love them, you think they're going to be great, it's worth the exercise to interview at least one or two more, just because it's it makes a difference. It's worth it. Having gone down the road of just being, oh yeah, they seem great, you're going to want to have multiple in the hopper, just because down the line, if something does happen with your property manager that you end up selecting, and sometimes you end up switching. It's just part of the business. If they are not fulfilling, you already have some good leads in your queue to move them over.
Yep. Another pro tip for property managers is if I can line it up properly, I love to have the property manager go and walk with the inspector for the property inspection just to get their point of view, because they're looking at it through a slightly different lens than the inspector. Inspector is looking for safety issues, property manager is looking for habitability issues. So you can kind of get two opinions as to what that property might need in terms of repairs to get it rent ready. And also, I love to validate what my agents are telling me or what I'm seeing in the marketplace. So nobody is going to have a better finger on the pulse of the market than a property manager when it comes to rent. So an agent might tell you, oh, this property should rent for $1,000. Great, thank you, agent. Now I'm going to go talk to my property manager and validate that information. If I'm hearing two different things from two different sources, now I need to go reconcile, okay, which one is reality and which one might be less than. So in talking about insurance, again, this is something that is ideal to have pre-close. And if you're using a mortgage, they're going to require that you have this done prior to close. And insurance is kind of one of those things. It's nice in that you can change it really at any given time. So it's not something that's set in stone. So if you get an insurance policy that you're not thrilled with at a rate that you're not thrilled with, just know that you can tweak it, kind of finagle it, massage it to where it needs to be after the fact, even after you close. It's not a big deal. So you just want to have something in place. The more robust, the better ahead of time, the better and easier that becomes. But don't stress over this, oh my gosh, I have to get my insurance done, I haven't gotten it perfect. Not a big deal. Like the other sourcing, I would say personal references is huge. Talk to other people that are investing in that same market, find out who the big players are and who some of the great ones are. And then professional references, like Tom was mentioning, talk to your lender about who they've worked with in the past. Talk to your property manager about who some of their other clients insure with locally. Talk to an agent about who they place a lot of their clients' business with. And then, of course, forums like Bigger Pockets, Roofstock Academy, and then online research as well. And so, again, kind of your pro tip, don't let that slow you down as far as your evaluation on properties and offering on properties. That's something that can come after the fact. And then local insurance can often offer better pricing than some of the national folks. And kind of like lenders, start with who you already have business with. Start with a name and a number of someone you already know. So if you have homeowners insurance currently or have auto insurance currently, call that insurance carrier and see if they write investment property in whatever state you're looking to invest in. That can be a really great way to just get the ball rolling. And you can also sometimes take advantage of multi-policy discounts, which are always nice to have.
On the note about local insurance may provide better pricing, I think that's especially true in areas that tend to have uh, more common natural disasters and issues. So, like Florida would be an example where a national carrier may price it a little bit higher than a local carrier who may understand the risks a little bit better. But I think especially in the areas that are more prone to those type of issues, it's worth getting local. Continuing on, so these are some of the less prevalent, at least especially in acquisitions on that process, part of your team, but still notable. So one of them would be the CPA. So this is your certified public accountant or the person doing your taxes. As soon as you start investing in real estate, I think it's worth paying that extra cost to get professional tax services from someone who has real estate related. So as a lot of people know, with real estate, there's a lot of tax advantages. There's deductions, there's depreciation, there's deferral if you're doing 1031s. And as an investor, you want to take advantage as much as you can. You want to squeeze as much juice out of the tax advantages. And for that reason, we recommend adding a CPA. Now, this is not somebody you need to add immediately before you buy, but I would just time it with when you are going to need to submit your taxes. So what are taxes due in April? I think they moved a little bit with COVID. So if
Yeah.
I'm buying a property, now, let's say, what is it, November, I would make sure that I have my CPA lined up in time for them to be able to submit for this upcoming tax season. So if you already own properties, do it right away, or still time it out for your next tax cycle to have this in place. So similar type of sourcing pyramid, personal references is a great place to start. Professional references, specifically your attorney, oftentimes your CPA, attorney, and if you have a financial planner, they have like networks of people that they like and would recommend just because they're often working with each other. So that would be the professional references, as well as forums and online research.
A question that just popped up in the question section from Ari is, do you need a CPA with just one single family rental? I think it depends. I know I have students in the academy that have been doing their own taxes for years and really understand the ins and outs of what's a deduction and what can be taken advantage of in the space. So if that's you, great. I don't think that everybody needs this. I do think from my experience that real estate CPA or tax professional is well worth what you're paying them and is often able to save you much more than they're charging you. So if you're someone who does their own taxes and is very comfortable with that, I still think sitting down with a CPA, going through what the tax deductions and tax benefits are, is a really good use of time and money. Then you can either have them do it the first year or pay them for a consultation and figure out, okay, how are you going to go do this all on your own? And then once you know, you can apply it across those multiple single family homes or multiple properties as you scale. But I think that, again, it's so nuanced and there's so many ins and outs and so many things to take advantage of that I found it to be well worth it, even just for a single property.
We were recording a podcast earlier today, and this point came up about, one of the beauties of real estate is, there's so much different things you can do, and you should focus your time on what you want to do, right? So as a passive income vehicle, I'd say taxes is something that I don't necessarily want to focus my time on, and that's a great place to bring in, other professionals that can, one, probably do it better than me, and two, gives me a leverage on my time to either doing more acquisitions or, I don't know, doing other stuff, or spending time, I don't know, in the mountains or something. All right, go
Literally
ahead.
doing anything other than preparing my own taxes. I think such a big part of this is knowing your strengths and knowing your weaknesses. Yep. And for so many of us, unless you're an accountant, tax is kind of an inherent weakness. So don't be shy in admitting that. I'll be the first one to admit it. So I think take advantage, like Tom, you're mentioning, of those professionals that is a strength for them.
Plus, it's a moving target. Like, it changes pretty regularly. Go ahead.
Totally.
Yeah.
So the attorney, This may or may not be necessary depending on what state you're doing business in. A lot of people don't find this necessary, especially for single family homes, for smaller deals, depending on what type of, how they're taking title, how they're closing on that property, whether it's in their personal name or some kind of entity structure. An attorney just might not be necessary for part of your team. I use one semi-regularly. I have her review documents. I talk to her about strategy and structure of entities. And so again, sourcing is like we've talked about before. Personal references are great. Professional references, oftentimes attorneys and CPAs play along nicely with one another together and can often recommend ones that they've worked with in the past. And then of course, bigger pockets, forums, Roofstock Academy, and then online research.
So this next one is kind of similar with attorney in that it's not necessary. In both of these functions can, your hard requirements can be provided if you use professional property management. So if you're using professional property management, when you have a turn and there needs to be work to be done, or if repairs and maintenance comes up, they're either going to have in-house resources or third-party resources that are part of their network within that market that they're operating in. So with a contractor, I will, all set boundaries around my property manager saying, okay, if costs are going to exceed XYZ, I want to see the bids that come up. I want to see multiple bids from a contractor, and they'll use their network. They'll ask me, hey, do you have any contractors that you want to use? And again, that's something that's not in necessarily my sweet spot. So that's something that may not be necessary, especially as a remote, more passive investor. But similar frame for sourcing of references, the professional references, property managers is a great one, just in that they're oftentimes in the weeds on the field services aspect, as well as forums and research.
Awesome. Question from Jason relating to CPAs, asking about should you hire one from the state in which you bought your property in? Like so many answers, it depends. So there are CPAs that are based all over the country and that are qualified to file taxes in all 50 states or in the lower 48. So I would just reach out to a couple and ask them, hey, can you file taxes in the state in which I own property as well as the state in which I live? So for instance, me, I work with a CPA who's based in California because I live here. I was meeting with him face to face prior to COVID. And so I own properties in multiple states. He just files my returns on my behalf in all those states because he can. So it doesn't have to be in the state either in which you live or in the state in which you own property. They could be based really anywhere. But you want to be asking them that question if they can file taxes in all of the states that need to have taxes filed in on your behalf.
Yeah, and I think, and with that question, can you do it? Have you done it before? Give me some references. Let me
Yes.
talk to some people. But we'll go
Yes.
through some of those specific questions in a minute. And this last piece is the mentor and coach. This is, Roofstock Academy. We've talked about that. But if you don't choose Roofstock Academy, or we still highly recommend getting it just for a couple of reasons. One of them is with real estate investing, it's oftentimes pretty large investments. Even if you're putting just 20% down on a house that's $100,000, 80,000, it's still like a $20,000, $15,000 piece of equity. And what is common with people who have someone with expertise, experience, you're going to make better decisions. And when you make even a slightly better decision, when we're talking about high amounts of money, it's really high ROI. And that could be from avoiding mistakes. That could be for providing a sanity check. That can be even for accountability, helping kind of get over paralysis by analysis. So that's a key member that we, recommend in having in your arsenal. And especially just because, as I mentioned before, it's like such a high ROI. It doesn't even need to make that big of an impact as a percentage, but since we're talking such higher dollar amounts, it's impactful.
Something I would just say about finding a coach or a mentor and who you choose to listen to is just make sure that they've done whatever it is you're looking to
Yeah.
do. So many of us think, oh, I can't become real estate investors because my mom said I'm crazy or because my dad said I'm losing my money. Well, then you have to stop and ask yourself, well, has your mom or dad done the things you're looking to do, and have they gotten to where you're looking to go? If not, they might not be the best mentor or coach in how to help you get there. So often we see coaches in professional sports are retired athletes that have played the sport, that have been there, that understand what you're going through on the day to day. that's who you want to be utilizing. Someone who's been where you've been and someone who's successfully gone where you're looking to go.
Another just like red flag in connecting with coaches or mentor, anyone who like calls himself a guru or a get rich quick, like
Oh yeah.
run the other direction as fast as you can. Real estate is a fantastic way to build wealth, but it takes time and it takes being strategic, and it's a fantastic way to build wealth, but ultimately it's a process, like anything, especially up front in those initial acquisitions and getting the system in place.
And while we're transitioning here, David is asking, is the Academy membership ongoing or is limited to a single year or other time frame? So it is semi-ongoing. We try to keep a pretty small balance between coaches and students. So as we approach that, we might have to slow down and kind of revamp things as we go on. So we're talking about interviewing members of your team. And so there's kind of a structure that I think both Tom and I like, and it really starts high level about the company, talking about the company's history, talking about the size of the company, different product offerings. And this is kind of applicable across the board, I would say, whether you're interviewing an agent or a property manager or a CPA. Most of these things are going to be applicable. There might be some that are going to be specific to different vendors or different companies, but I think at a 10,000 foot level, we can apply this across the board. So you start at the very high level about the history, size, product offerings, and then talk about historical performance and ask them about historical performance. So what kind of volume are they doing? What are some of their KPIs or key performance indicators that they look for and evaluate themselves as an operation on? Next, I think it's really important to talk about fees. Is it a one-time fee, recurring fees, non-standard fees? Getting this out in the open up front, I think, is really important, because if you spend an hour talking to folks only to turn out they're going to charge you 50 grand for whatever, it might not be a good fit. So I think getting that out in the open is important. And then talk to them about their procedures and processes. Do they have industry standard SOPs, standard operating procedures? Is there a conflict with management in how they're structuring things? What are their customer service expectations? And then last but definitely not least is references, like we've been hammering on throughout this whole webinar, is get 3 references who aren't their Uncle Joe or their Aunt Sally, someone that they don't know personally, that's not in their inner sphere, but who's a genuine customer, a genuine client of theirs they could put you in touch with to really get an objective opinion and review about the company or the provider.
Yeah. A couple of other pieces of color that I'll add on these. So one of them about the company that I think is great is talking about product offerings. You'd be surprised, like a property management may also be a brokerage, may also be an asset management company, may do all kinds of stuff. So it's worth understanding up front, and I wouldn't be bashful about asking these questions of product offerings is a great one. The other one that I think is really important to ask around fees is, how do you make money? What are all the different ways that you can make money off of me? And again, I wouldn't be bashful about the way that you're framing these to be really explicit. I mean, I've identified property managers who have some kind of bogus fees around like technology fees and, rust proofing fees and stuff like that. So I would give them an opportunity to like really spell out everything. With that. And the same thing with procedures and processes. We're going to look at one of the examples, or a few of the examples that we have related to our lender SFR playbook interview guide, as well as the PMs, but there are some specific questions that you should ask with property managers. What's your turn process? What's your tenant screening process, where you may not need to know what the perfect answer is, but to have kind of like a sniff test and like, okay, yeah, that makes sense on how you're screening questions. It's really putting them kind of on the spot that they're adults, in managing the process.
Absolutely.
Excellent. So I'm going to go ahead and open up the lender screen.
And while you're getting that pulled up, Tom, we got a question here. Someone's asking about, how do you shop for lenders without having your credit run each time? Many are saying they can't provide disclosures without it. So it's a great question, and it definitely is hard to do. I would say keep shopping around till you find one that will give you a ballpark idea of what their rate and terms look like without pulling your credit. A really good one is aimloan.com, which is an online only lender. That's AIM, like aiming at something, loan.com. Man, I should be getting kickbacks for this. I don't. We do a lot of business within
Slash
that Roofstock.
Inc.com/Michael Albom.
That's
Yeah,
right.
yeah.
And so the cool thing about them is you just input your credit score, whatever the number is, the zip code in which you're looking to do the deal, and how much purchase price and loan you're looking to obtain. And they'll give you a printout of what the different rates that are available today are and what their fees are. And you can expand that and search for different rates based on different down payment amounts, different points amounts that you're willing to pay. So it's a really good idea. It's really helpful just to get a ballpark idea of, hey, I know this rate exists. You might be able to get a better rate elsewhere, but at least today, without having to get your credit pulled, I know that I can get this rate. So that's a really helpful website.
I got this from the Slack channel, the Roofstock Academy Slack channel is Loan Depot. I just refinanced my
Yeah.
personal, and man, rates are so wildly low. It was 2.85%, and I heard someone say that in the lender Slack channel, and I like didn't believe it, so I reached out to them, and it was true. So I'm like, okay, time to refinance my personal. And so Loan Depot, and I believe they do rental properties as well. Another one, Arvest, is one that I've worked with before, and a great thing about, I believe, AIM and Arvest is they don't sell their loans, so they don't need that margin, so they can offer very, very low rates. They are with lenders. Some of them may originate the loan and then sell it later, and they make money on the split between what they sell it for and what the secondary market buys it for. So knowing that is another good question. Go ahead, Michael. I'll let you jump into the lender interview questions. I think we're jumping ahead. It's fun
Yeah,
stuff.
yeah, perfect. So this is our lender questionnaire or interview template that we created for the Academy. And so we just have some high level questions about the company that I would look to ask. And we have the question and then, pardon me, and then a list of just kind of color background about some things to be thinking about, or maybe some red flags to be aware of, or answers that you might like to see or should expect to see. So for instance, how long have you been in business? And so if they've been in business for less than 5 years, I would definitely ask about their founder's background. And just know that most national banks have been around for at least 50 plus years. So understanding also where their branches are is really important, and getting a handle on if they have physical branches or just brick and mortar branches, physical brick and mortar branches.
Yeah.
I didn't say that very well. Or are they an online only lender? So understanding that could influence your decision based on how you like to do business. Are you someone that really likes to go in and see a teller in person and do business face to face, or are you okay transacting on the in the online only space? Asking about if they work with lots of investors, I think is super, super critical, because so much of the things that we're evaluating as investors are going to be reflective in the loan products that we're looking for. So I like banks that work with their investors, since they're going to have investor tailored products. Asking them what percentage of their business comes from real estate investors, what their different loan products look like, where they have FHA, VA, ARMs, etc. And then test the lender. You can ask them, hey, based on my specific deal, what type of loan would you recommend? And we'll see just how investor friendly or investor savvy they are based on your goals.
Love that.
Asking them, yeah,
Oversharing.
oversharing, absolutely. Oversharing for the win. So is the lender a direct lender, or are they a mortgage broker? Will they provide references for current or past real estate investor clients? Do they candidly answer your questions, or are they kind of shifting you around and not really being direct with you? So asking about a virtual tour of their online platform. Every lender you work with should have an online portal. It's 2020. If you can't access this stuff online, I personally would go in a different direction. Tom, you?
Definitely. Yeah.
Yeah. This is just something that, especially in today's day and age with COVID going on, this so highlights the importance of having an online presence, an online portal. Asking about who the main point of contact would be. The person you're speaking with might be an outside salesperson, might not be the person that you're going to end up working with. So getting to the person who you're going to be working with and making sure that relationship is going to work for you, I think is really important too. Asking about if that
And
point
after.
of contact. Oh,
Sorry.
after
Yeah. And
closing
after.
as
Who's that
well.
point of? Yeah.
Yeah, absolutely. Asking them about how long they've been with the firm, what did they do before they were working as a lender, what's the best way to reach them, and how will you be providing info for submitting taxes. Every lender should be giving you what's called the 1098. It just highlights how much interest has been paid for that calendar year. Then getting into rates, criteria, and performance, ask about various interest rates. And so this is going to be driven by what the economy is doing and your specific credit score as a borrower. Asking them about a rate float down after the lock period. And so for anyone who doesn't know what that is, oftentimes you can lock a rate because rates change every day. So if I'm a borrower and I go to a lender and I say, oh, okay, what's the rate today? And they tell me 3%. I say, great, lock the rate. So that rate I have is 3%. Now it could take 60 days to get this loan to close. And keep in mind, the rates are changing every day. So if by the time my 60-day escrow has elapsed and rates are now at 2.5% when I'm getting ready to close, will they float down my rate? Will they honor that new today's rate at 2.5? Asking if they'll do that for you is really important. Asking about different loan to value ratios. Will they lend at 80% or they'll lend at 75%? Talking about fees, asking about origination fees and lender credits. Do they offer them on different loan products? This is all covered on AIM Loan, which is the cool part. They show all of this and spell it out based on the interest rate and all this kind of stuff. So that's why I really like the website, just to get a ballpark idea of what rates are doing today. Asking about refinance charges. Do they have them? That's super important to know down the road. If you're buying a property that you're expecting some appreciation or you're buying into equity day one, you might absolutely look to refinance later down the road. So knowing what that looks like ahead of time, I think, is really important when selecting and determining what lender to work with. Asking about prepayment penalties is like so important. 90% of them likely that you'll encounter in the conventional loan world in the single family space are not going to have prepayment penalties. This is more common in the commercial loan world, but definitely something to be aware of. You can get shackled to a lender, and I could tell everybody stories, but I'm not going to go into that right now.
One of the on the fees piece, sorry, this is a piece of advice that you had given me that I thought was so helpful, is oftentimes those rates can move quite a bit depending on what your loan to value, like how big your down payment is. So in the spirit of oversharing, I may give my lender, okay, what is going to be my rate if I pay 80%, 70%, and 50%? And you can get multiple values back from that agent that you're working with. Is just kind of a great way to, one, test them to kind of see what kind of customer service, and then two, like plug it into your model of evaluating a property on what those different rates look like. Sorry,
It's
go ahead,
such
Michael.
no, it's such a good point. I think because something we model all the time in the academy is showing folks how they can get, you and I can buy the exact same property and have the exact same rent and income and expenses, but if we have different financing, that property is going to perform vastly different. So if you put down 25%, I put down 40, again, we might have very different returns. So understanding what that looks like on the front end is so huge. Asking about underwriting criteria. What is debt to income do they look for? Are they going to require you to have reserves in cash? How do they treat rental income? Do they treat it as actual income to boost your income on the debt to income ratio? Will they allow you to count that towards your debt to income when calculating what kind of terms you're getting on your mortgage? Do they include retirement funds towards your cash reserve? What's your typical close time? Clearly, anybody reading this will know that this was made prior to COVID. So ideally, no more than 30 days has kind of gone out the window in today's day and age. But if they can do it, great. I was working with a lender. I did a refi on my primary, and they closed it in like 21 days. So I was pretty astounded. So it still rings semi-true, but I think that's no longer the norm.
One point that I might just make related to Roofstock Academy, like if there's any, it's really made for people who, a wide spectrum. So people who, if any of these like terms we may be like throwing isn't familiar, no problem. I'd say probably a third of the investors in Academy have very little experience. A third have some experience, maybe in that 1 to 5 properties, and a third have much more experience and have a lot of properties. So just kind of a point of saying, if you're hearing maybe terms that you're not familiar with, the getting up to speed in education, this isn't a program that just for more advanced investors or just beginning investors. It's really kind of the full gamut, and that's what's so great about the pick and choose kind of within the lectures, and then having the coaching very specific to you. But anyway, sorry, just chiming in real there.
No, perfect. And I just got 2 more questions too that I'll just jump on really quickly. So question from James, are the benefits covered in the academy pertaining to investing via an LLC? Yeah, absolutely. The biggest one is just asset protection, talking to an attorney about how those vehicles work in your states and specifically for you as an individual, I think is hypercritical. But the biggest protection to LLCs that LLCs offer, the whole reason people do it, invest in one, a single member LLC anyhow, is just the asset protection and liability protection. Kind of two different schools of thought. Some think you get it with high liability insurance. Others think LLC is necessary. And then
Yeah.
one other question is piggybacking. Does the Academy cover commercial investments also? Yeah, that's something I cover in my coaching sessions. That's something you want to talk about. The vast majority of my loans and investment properties are commercial products, whether it's quick service restaurants, double, triple net leases, or multifamily commercial properties. That's something we can absolutely cover. And just for those of you who might not know, commercial investment properties for multifamily are 5 units and above. Tom, you were going to say something?
No, go ahead.
Sweet. Let's keep chugging along on the questions here, and excuse me, in the template, and then asking about process questions. So, like you just mentioned, will my loan be sold once it's closed? Or you're going to serve it throughout the life of the loan? That's important to know. It's I like personally working with lenders that keep my notes on their books. That's the technical term for that is a portfolio lender. It means they keep it on their own portfolio, on their own book of business. They don't sell it in the secondary market. I love working those types of lenders. You're welcome, James. How I'll receive updates and documents. Again, having the online only option makes things easier. They're just equipped to work in the online space versus brick and mortar stores. Brick and mortar banks can often be a little bit more conventional with regard to how you need to get documents to them. And then some closing questions, will you match rates? If they will, definitely shop around for the best product available. If they won't, that could be grounds for walking away. I've had someone tell me, I was working with a commercial lender. It was an amazing product they were offering. It was a portfolio loan, single note across multiple properties, multiple commercial properties. The rate was not that great, but the terms were just killer, and they made it so easy to get. And I said, hey, I can get a lower interest rate somewhere else. And they said, well, I would probably go there then. And I was like, you called me out. So depending on the flexibility and how much you like working with that lender and what that relationship means to you, I don't think cheapest is always best, but they should be a little bit flexible, a little bit willing to work with you on rates. And so if they will, go get some different rates and come back to them and say, hey, this is what I'm seeing elsewhere. Can you match it or beat it?
One last little kind of pro tip in the lending process is, say, in looking at your closing statement and seeing some of those costs, perhaps an origination fee, perhaps points. This is another thing that Michael had advised me on is like, hey, just ask for them to get rid of it. And that sounds really silly, like to say that, but it works. Like it doesn't work all the time, but no joke. This refi I just did on my house, they had it was maybe $2,500 in points and lowering the basis. I'm like, hey, can you get rid of that? Like, and he was able to do it. Like I think with a lot of these vendors, like you don't know what you can ask and you don't know how much leeway they have. So it doesn't hurt you to ask. And there are some very specific things that you can ask for that have, wildly high ROI.
And I think it's one of those things that what's the worst that's going to happen? They
Yeah.
can just say no. And it's like, oh, okay, well, I just thought I'd ask. Thanks. Let's move on.
Yeah, exactly. And I think the origination fees, any points, ask nicely and you would be surprised. So we're going to touch, since we're running kind of tight on time, we're going to run quickly. We're not going to cover all of the property management one, but I'm going to cover just a couple of these high level ones, and then we're going to head back for make sure that we get more into the Q&A. So how long have you been in business? It's kind of the same structure. Another good question, do they strictly manage residential or do they do both and as well as residential? What other service do they have? Kind of similar to that point we made asking earlier in the presentation. I would also ask about what are some other key ones? And Michael, feel free to add color within this section as well. Do they personally own rental units? Perhaps what are their typical customer profiles? Are they managing for other funds? Are they managing for other retail buyers, such as individual investors? Another one that I think is really important is, does your company have multiple satellite offices. So this happened to me where I selected a property manager. I didn't know to ask this question, and the property manager, they sounded great, and the office that was managing, it was a satellite office, and they had just started it, and there was like one employee trying to manage everything, and it ended up they like lost track of it. So I get an email from my PM one day saying, PM for property manager, saying, how do you want to deal with sending the security deposit? I'm like, what are you talking about? It's occupied. And they're like, oh no, we forgot, we didn't let you know they had moved out. And it's like, if I had known to ask that about them having a satellite office, I would have known that, how long has that satellite office been operations? How many employees is there? What's their ratio of property managers to tenants? I could have made a different decision. I ended up moving away from that property manager, but that's just a really important piece to ask, is if they have multiple offices, if they have satellite offices, is that the one where your property's at, and is it staffed appropriately? How long has it been in operations?
Super good
Um,
point.
Another one is, how many units do you have under management, is a good question. I typically invest in larger markets, so I would expect there to be more. Being in the Atlantas and Orlandos and those bigger markets, but in smaller markets are totally great as well. But I would want to know that, if they have very few properties under management, and the properties, I would be concerned about kind of longevity of the business. And that, like, I don't want to have to pick a property manager, go through the onboarding process, and then need to pick another property manager in the very short term. Any other final ones that you want to touch on, Michael? Because I want to make sure we get to some questions back at the end.
Yeah, I think the last one that I would highlight is the style of property or the asset class in which you're
Yeah,
looking to purchase that they have experience managing. So single family homes, multifamily, small multifamily, Section 8, student housing, all these different types of asset
vacation
classes.
rentals. Yeah,
So you just want to make sure that the manager you're bringing on board has experience. You don't want to be that first guinea pig where they learn how to manage that asset class on your dime.
perfect point, Michael. Perfect point. Excellent. And just to get the last piece that we have within here is this is vendor comparison sheet. So we go through the exercise of identifying all of the different uh, property managers and lenders. You want to have a sheet where you can easily look through these different vendors and see these points of decision, these variables in making your decision. So as much as you can be not subjective and be objective, where you've identified your 3 property managers, you've collected all these key information points, and now you can look through, okay, based on their different fees, okay, this guy's this much, this is this much, okay, how many units, okay, the company details is this much, okay, I looked at their investor portal, okay, their general customer service, and after going through this exercise, you can make an informed decision that's not, this person seems like they're good. You've done a real professional exercise in making that decision. So this is the last piece of the playbook that basically ties it all together in making that decision. Um, Excellent. So those were the interview guides that we ran through. One more reminder on Roofstock Academy Mastery Program. So Thanksgiving 2020 is the code, and it's a one-time payment. This isn't a deal where you're going to get upsell to buy anything else. It's just one time and you're in. Everything is lifetime except for the one-on-one coaching, just because it's a super involved process with the coaches being there. But everything else is lifetime. And with that is the lifetime full refund satisfaction guarantee. So no questions asked. If you're not happy, do the coaching, watch the lectures. Not happy, no problem. And lastly, the $2,500 in marketplace cash back. And if you do the math there, you're paying a little bit over $1,000 and you're getting $2,500 back. So it's actually like, it's sort of like Roofstock's buyer rewards program on top of all the stuff that you get, with that no-brainer of the full refund. So Thanksgiving 2020, and it's going to expire end of day on Sunday. So with that said, Michael, let's go ahead and jump into, we got some more links here. So scheduling a call with some of the marketplace expert, the Roofstock team, some of the Roofstock website team can help you there. There's a link there I'll add into it, as well as the link to Roofstock Academy, as well as a link to other Roof Talk webinars that we have. So excellent. Let's go ahead and jump into additional questions.
Perfect. So we have one here. Someone says they have a great credit score, but are currently unemployed. Do you know of any bank lenders who would lend to someone like me? Of course, the assumption is that the underlying properties that I would buy through Roofstock are forecast to generate healthy positive net cash flow. That's a great question. Lenders are super tight right now because of COVID lending requirements. They've changed a lot of what their lending requirements look like. So most traditional lenders are likely not going to be able to lend to someone who's unemployed, depending on the style of property. A commercial lender you might be able to get financing with, because they're traditionally looking at the underlying asset to service the debt more so than the borrower as an individual. You could also look at hard money lenders. You could look at private capital as well. Those might be three kind of good resources to utilize and check out.
A question asks, would buying in a different state add significant complexity and therefore cost by having so many partners? I think there's a lot of value in buying in a different state, in that perhaps you are diversifying your investments. Perhaps you're living in an area where investing in a rental financially doesn't make sense, in that the price is so high and the rent is relatively low. There is a little bit of complexity in that there is identifying, if you're using professional property management, which I would recommend, in identifying them and onboarding. But what's great about this, once you go through this exercise, it can become very passive. It's that upfront analysis, acquisitions, onboarding, and then once the system is flowing, the system is flowing. You have automatically funds are coming in from your PM, funds are going out to pay your mortgage, and you have some cash flow in between, as well as some appreciation on year over year. So, perhaps there is a little bit of overhead with investing in another state, but there's a lot of reasons why it could make sense, and I know it makes sense for myself.
Darcy's asking a great question. As long as the buyer has the funds but still wishes to finance part of the purchase price, do you agree it would be best to come in with an all-cash offer to the seller and then pre-qualify with the lender once the home closes, proceed with financing a portion of the property with the lender? I think it's a great strategy. Going in with an all-cash offer, you can often beat down the purchase price, and then turning around after the fact, once you own the home free and clear, and putting debt on it. It gets a really good way to go. Again, I think you highlighted it nicely that you want to pre-qualify with the lender and have that conversation on the front end prior to purchasing the property about what it looks like to refinance it after the fact. So I love that strategy.
We got a question. What is the typical fee that CPAs charge? Asking specifically for the East Coast. I don't think there's going to be that big of a variation between East Coast and West Coast on CPAs, but it really depends on how complex your tax return is going to be. I would say the floor would be $500 to $600, as up to a few $1,000s. But if you have just one property and like a W-2 day job, I don't think it's going to be that high of a fee that you're paying. Somewhere in that range, I'd say.
And James was asking, what resources do you recommend to use to find a PM? So one of the nice things about Roofstock is it's totally free and available to anybody. Just go on roofstock.com, click on any property, or you can search, filter by property type or property location, and you can just click on buy process on any particular property, and it'll actually show you all the property management partners that Roofstock has vetted in that area. And it'll highlight what their fees look like and what their cost structure looks like. And so you can just start with a name and a number if you'd like. And again, that's totally free. Even if you're not using the Roofstock platform to purchase, you can just go ahead and take advantage of some of the pre-vetted property management partners.
Your audio went a little bit in and out. So just to reiterate, within an individual listing, if you go to buy process, it'll show you recommended property managers, all just for free on the Roofstock website. But what I recommend doing is I wouldn't take anyone's word at like 100%. I would still go through the exercise of talking to them and going through that process, and perhaps talking to, at a minimum, a few. So even though they're recommended by your friend, by your agent, by Roofstock, by whoever, I would still go through that process of speaking to them on the phone before and asking them those important questions before making a decision.
Thanks for backing me up on that, Tom. Appreciate it. Is it coming clear? Is it coming through clearer now?
Yep.
Awesome. So Lena's asking, is 20% the minimum for down payment? Traditionally, yes, and it's going to kind of depend on the lender. And so like Tom was alluding to previously, Ask your lender if you can put down 20%, if they'll finance 80%, and also ask what happens if you put down 25 or 30%. What does the interest rate do? We can often get a pretty significant break on the interest rate at 5% incremental thresholds. I've been hearing a lot though that 25 is kind of the new 20 as a result of COVID. So again, talk to your specific lender about what the down payment requirements are going to be.
What else we got? Oh, this is a good LLC related question. We had some good questions here. Is umbrella insurance an alternative to not setting up an LLC? Michael, I'll let you handle this one.
Yeah, so there's kind of two schools of thought on this. One is pro LLC, one is no LLC. Pro LLC says having all of your assets kind of segregated and siloed in an LLC is a great way to go for asset protection and liability protection. The other school of thought says, yeah, you can get the same type of protection with just high liability limit insurance and then compound that with an umbrella. So who's right at the end of the day? We're only able to determine after a lawsuit. So I happen to be in the pro LLC camp. I like the asset protection that it offers. If that's not an option, yeah, I think absolutely an umbrella is a great way to go. Even if an LLC is an option, an umbrella can also be a great way to go. So it doesn't have to be one or the other. I personally happen to have an LLC that has an umbrella sitting on top of it. So it's definitely something to look into as an investor, absolutely. And it's often some of the cheapest liability insurance you can get. So an umbrella can be a nice kind of catch-all to have. How much is the one-on-one consulting? So we offer two kind of programs, if you will. One is the full-fledged mastery program, which is $1,250, but the discount code is $1,098. And then we sell just the one-on-one coaching if that's important to you, or if that's you'd like to take advantage of. And we sell 5 hours of that for $750. So you can take advantage of that if you would like.
We have some questions around some other Roofstock products that we've had in the past and in the future. So what is Roofstock Turnkey 2.0? We actually have a webinar tomorrow related to Roofstock Reserve. So I encourage you guys to check it out tomorrow to learn. And we'll have more content on those other products that we offer.
And Lena's,
go ahead.
Go ahead, Tom.
How do we mitigate the bad renter? Lever a property manager, or are there solid resources available for credit background check? So so there's two different ways, David. So if you're buying the property occupied, it is making sure that you're looking at the payment history of that tenant before you buy. So for Roofstock, some of Roofstock properties, if you're buying off of Roofstock, it's looking at that in the diligence vault. If you're buying it off of Roofstock, it's making sure that you get that during the escrow period and that there is a contingency. And then also looking at the lease and making sure the lease and the tenant ledger match up. If you're buying it vacant, it has so much to do on the process of your screening criteria. So I'll oftentimes defer to my property manager on what they think is the appropriate level, and that's kind of part of their core competency. But perhaps in the beginning of the process, one of the questions to ask them is like, okay, what's your debt to income ratio with tenants? And just kind of ask them some questions like that to do a little sniff test that they're thinking critically about it. And what's their rate of bad debt? Is another question that you can ask them to as kind of a canary in the coal mine that's something that they're thinking about.
Yep. Lena's asking if I buy a house, am I buying it myself or with other Roofstock members? No. So if you're buying a house on Roofstock, it's going to be just yourself. You're going to own it individually. Roofstock One is a program that's currently on pause, which is kind of like a syndication, or you can buy shares in a property. So there you have an opportunity to buy property with other Roofstock members. But traditionally, no, it's just going to be yourself.
I'm asking a question. Do you recommend buying the house in cash and refinancing it afterward? I think that's a great strategy. Kind of depending on the situation of the seller, you may be able to get a little bit of a discount doing that. It's not required, but that's a common strategy where you can close a lot faster if that's an important aspect to you. So I'd say if you have the cash and are okay, kind of tying it up from the time that you close to the time that you refinance, sure, like why not, buy cash
It's
and
a really
refinance.
great strategy.
Yeah.
But I think someone else asked the question previously as well. And so having a lender lined up to do the refi on the back end before you even
Yeah.
purchase the property, I think can be a really great way to go. So you're not coming at it kind of cold turkey and scrambling to get it done when you can. So Dylan is asking for a new investor just starting out. Would you recommend setting up an LLC in your home state or a tax-friendly one like Delaware, even though you won't be doing business in the state? I've been getting conflicting reports. Thanks. So Dylan, it's a really good question. I would say go talk to an asset professional, an attorney. It really depends on every state's laws. So for example, in California, I have to have the LLC registered in California, even though I have a couple of LLCs, but this one in particular doesn't own property in California. So the sheer fact that I live here, California is defined that as I'm doing business here, meaning I have to register it here, meaning any tax advantages I would get in registering it in another state go away. So I have to pay the California franchise tax fee annually, which is $800 a year, regardless of where else I register my business. So talk to a professional about how to structure that and what your state's requirements are, because they do differ from state to state.
My last question I'm going to get, and for the ones that we were not able to get through, we're going to add them to the queue on the podcast, The Remote Real Estate Investor. Anywhere you listen to podcasts, check us out. So the last one is related to how COVID is impacting rentals, and it's been actually a bit of a positive boom for single family rentals in that demand for that extra space has been skyrocketed. So a lot of people that were living in the city in an apartment, and they have the ability to move out to a little more space to a single family rental. Occupancy and demand for a lot of the property managers that we've spoken to has never been higher. I just went through a vacancy and it rented out very quickly for even like an increase in the rent. I think the impact of the pandemic has not been I think it's been negatively impactful on big cities where, perhaps a lot of these employers no longer require people to go to the office. You can work from home. I think in smaller cities and more of working class cities, single family homes have done quite as the actually returns have actually improved, and that so many people want these homes not to be living in an apartment complex. And as far as like not paying rent, I personally haven't had an issue within the portfolio that I have. But this is not, I'm not speaking for everyone, but I think generally speaking from my personal experience as well as the property managers that I've spoken to, it hasn't been too impactful on the single family rental space. And if anything, a bit of a positive.
Yeah. Yeah, perfect. Tom, do you want to bring up our emails to share on the screen with everybody on our way out?
Yes. Excellent. Sorry, just moving
Perfect.
stuff
So
out of the way.
thanks everyone for hanging out with us a little bit later than expected, a little bit beyond the hour. This hopefully was valuable. I had a lot of fun. I think Tom did as well. We really enjoyed doing these. So if you have any questions about Roofstock as a whole, about Roofstock Academy, what the program offers, please feel free to reach out to either Tom or myself. Tom's at tom@roofstock.com. I'm at malbaum@roofstock.com. And again, this webinar is recorded, so if you can't write that down fast enough, just check out the recording and look to the end. So again, thanks everybody. The questions we didn't get to, we will jump on, we'll put into our AMA podcast, the Remote Real Estate Investor. Lastly, the Roofstock Academy coupon code is Thanksgiving 2020, and that expires Sunday, end of day. So look forward to seeing many of you in the Academy, and thanks so much for hanging out with us. Happy investing.
Happy investing.